Hi, am I audible?
Yeah, yes, sir.
Hi, all good? All set on your end?
Yeah. Uh, Welcome, sir.
Thank you.
Hello, everyone. On behalf of Amalthea 21, I would like to welcome you all to the webinar on cryptocurrencies and blockchain technology. Before moving ahead with the webinar, I would like to give a short introduction of Amalthea. Amalthea was started in 2010 and is the first completely student-run technical summit of India. And our four pillars are Conclave, Symposium, Tech Expo, and events. And now I would like to give a short introduction to of our speaker. Mr. Raj Chaudhary is the managing director of Hashcash Consultants and a blockchain pioneer. Mr. Raj pioneered the first interbank trade finance and remittance implementation of blockchain technology between two of the largest global banks. Mr. Raj is an eminent voice in the blockchain and cryptocurrency space and actively engages with the policymakers in this area. He is a contributor to Economic Times, Business World, CNN Money, and advises industry leaders in the adoption of blockchain. He had been a research associate at MIT's Microsystem Technology Lab. He is a member of ASHA Silicon Valley, a non-profit organization committed to education for children in emerging countries. Author of the book The Dark Secret of the Silicon Valley, Mr. Raj is an investor in blockchain and cryptocurrency companies and an active member of philanthropic community. Now, without further ado, let's start the session. All of you are requested to put your questions in the chat box, and Q&A session will be held at the second half of the session. I welcome Mr. Raj Chaudhary to take the stage. Over to you, sir.
Thank you so much for that warm welcome. It's always a great pleasure to be talking at the IITs. We did, on-site conversation with IIT Mumbai. That was before the COVID hit, and then spoke for I think Guwahati was the other IIT that that had invited earlier, and now Gandhinagar. It's always a great pleasure to meet the IITians, all the bright minds, and of the future generations. And a lot depends on you guys to take the technology world to the next level. And it's my absolute pleasure to be here today. Thank you for that warm welcome. So I wanted this session to be as interactive as possible. Okay, and rather than this is being a monologue, I would rather keep a lot of time for Q&A sessions, and then you can ask me any questions, and then I can directly answer them and keep this conversation free flowing. I think we have a great attendance as well. I see about 83 participants today in this webinar. So I think we'll have a very engaging conversation to take this forward. Before we open it up to the panel and question and answers, I'll give a very short, brief about a few things about blockchain and cryptocurrencies, where we are, what we have done so far, and what we intend to do in the future. So our journey with blockchain started about in 2013, 2012 timeframe. So we were at that time, very few people have been hearing about blockchain and cryptocurrencies, and I think Bitcoin started about 2000. People say it's 2009. It's about 2008. Okay, time frame. So it started about that time, and we were a couple of years later. We were looking at cryptocurrencies, the popularity, very little popularity at that time, but still it was picking up at the time. And then we were active traders. We were trying to understand the technology behind Bitcoins, which is blockchain. And I think the participants here today in the webinar has some understanding of what blockchain and cryptocurrencies are. Cryptocurrency is an implementation of blockchain. It's probably the most important implementation of blockchain. There are many other implementations of blockchain, ranging from implementation in traceability, or what we call provenance, traceability of parts. You can apply that to traceability of automobile parts or pharma parts or various other supply chain industries and logistics. And of course, finance is a big implementation of blockchain and cryptocurrency, and that's where it started. And I strongly believe that's where it's going to find its largest implementation and market and adaptability. In that journey, we started as active traders, active seekers of knowledge in the technology area of blockchain, and then in 2014, 2015 timeframe, I came back to India for a couple of years and joined ICICI Bank as the technology head there, and then we did the first implementation of blockchain technology for remittance and trade finance between ICICI and one of the other banks in the UAE, which is Emirates NBD. So from there, we started Hashcash also around that time frame, and a lot of the people who were working there joined the team of Hashcash, and we started working with many banks. Today, we work with many global banks, several large banks internationally, not so much in India, but a lot in the US or even in Russia, Singapore. We also run the exchange called Paybido, which is more of an enterprise exchange rather than a retail exchange. It offers the technology for opening exchanges for other companies that are getting into the space. A lot of other companies like brokers from other asset classes, like you have forex asset classes, you have commodities or equity asset classes that are now offering crypto as a new asset class to their investor groups, right, and their clients. So a lot of these companies come to us for technology assistance, starting their first exchange, right, and offering cryptos as an asset class to their clients and investors. So we offer them technology, and also Paybido offers the liquidity for many other global exchanges. So that's what Paybido does. We also have BillBitcoins.com, which is the payment processor for specific to cryptocurrencies. So you can call it the PayPal of cryptocurrencies. Then we also run Satoshi Angels, which is the investment arm of Hashcash. And then we have the education arm under blockchain101.com, right? So that's a brief about Hashcash. I think this is one of the most transformative technologies of our times. This is the internet of money, like people call it. We have had implementations of technology and money transfer happening online, but they are not what we can do with blockchain. So if you are transferring between two of your students in IIT, one person transfer the other person money, you are essentially doing it through your banks, right? So you're trusting your banks to hold and maintain your ledger, and you're trusting them to do the transfer for you, right, through the various UPI or IMPS, whatever systems you are using in India or abroad elsewhere, right? So blockchain gives you the ability to do peer-to-peer transfer without the need for an intermediary. So the key here is, if I hold a wallet on a blockchain-based system, and you hold a wallet on another blockchain-based system, and I want to transfer you a certain amount of currency, then the validation or the double spend problem is solved by the validating nodes, right? So they validate the transaction, ensure that if I am sending you $10, then I am not able to send that $10 to another party, right? So the problem of double spend is essentially solved by the validating nodes. Versus, if you imagine what we used to do, we used to trust on the banks to maintain the ledger and make sure that you are not double spending from your account. Now you can do that completely over the internet without the need for a third party or a bank, right? So that's the power it holds. I mean, now you can extrapolate that to so many different applications in the world, but it's a tremendous thing to be able to transfer money cross-border or domestically between two parties without the need for intermediary bank or any other third party that would hold and trust your wallet. So you imagine this power that it would bring to the financial world. It is truly the internet of money. Now we are essentially transferring, holding wallets through the internet, okay, and not through another party. So that's a very brief about blockchain and cryptocurrencies. What I would do now is, I'll keep this, like I promised, I hope I kept this short enough. So I'm going to leave this to the panelist who is going to ask me some questions, and I will answer all your questions to your heart desire, and you can counter question and get everything, all the curiosity that you have in mind, and I'll do my best to, answer those curiosities.
Yeah, yes, sir. We got some questions. So I will be starting with the question. Cryptocurrencies today are based on blockchain technology. Is blockchain technology 100% safe and reliable to use? If one person or a group of miners owns more than half of the digital hash mining rate, is it possible for them to manipulate the system?
There is no system in the world that cannot be manipulated. You can't, everything is a matter of probability and difficulty and the barrier, right, to manipulate. There is no system in the world that is 100% proof, right? It's just that some systems are extremely difficult to hack versus others which are relatively easy to hack, right? Now, if you think about blockchain, blockchain is one of the toughest system to hack into. It is by design distributed, right? So if I hold nodes as a party, then there will be distributed nodes that keeps a copy of the ledger, right? Now, where on earth you have another system which is so decentralized and so proof of losing data. So for example, a Bitcoin blockchain has thousands of nodes distributed around the world, right? Now, if one of the nodes acts as a rogue node, the others will eliminate that node, right? It will no longer be part of the system. And that's pretty much can be generalized to many other blockchains or probably all other blockchains, okay? So without getting into the details of consensus, you need to understand that the nodes are decentralized, and a change in a blockchain system has to be validated by other nodes. Validation process is a relatively simple process. So if you if you're a miner, let's talk about the Bitcoin blockchain for a moment here, proof of work, you're mining, and it'll consume quite a big deal of effort for a miner to be able to put a transaction on the blockchain, and it'll be relatively easy for the validating nodes to check if the miner has acted in good faith or in the right way as desired, right? So, so the point here is it's an extremely difficult system to penetrate. And you also need to understand there is no reason for thousands of nodes to sort of collaborate against the Bitcoin blockchain, right? They have so, different interests, right? They might be in different countries. So, for all these nodes to be colluding and getting together and colluding against the blockchain, it's virtually impossible. So bringing 51% of the power, hash power, and they coming together to collude against the blockchain is virtually impossible. Now, if you're trying to hack a blockchain without gaining consensus of 51%, also then it's tremendously difficult. Because if you imagine, like a lot of people say, and I'm obviously pulling the stats out of anywhere, but if you can combine all the supercomputers in the world today, you wouldn't have enough power to take over a Bitcoin blockchain or a blockchain that is distributed or decentralized enough, right? Now, this is one side of the coin. Now you have to also understand the other side of the coin, which is now it brings into a lot of geopolitical questions in mind, right? Which countries control which blockchains? So, and it's never desirable to have power in the hands of a few, or in the hands of a few bureaucrats, or in the hands of a few miners. So we are constantly blockchain as decentralized as possible. Now, of course, humans have a tendency of centralizing things. And and that's a problem, okay? But the ideal state is where we maintain the decentralization, we maintain the diversity of the interests of the parties that are validating nodes or the miners, and we keep the blockchain fair and safe and something that lasts for decades to come.
Yes, sir. Yeah, that makes sense. The second question is, what are the particular areas of the of a blockchain people working on? Like, what are different areas in which people are working on related to blockchain technology, sir?
Well, so this is a very wide area, and of course there are, like I said, so many implementations of blockchain that it can hardly be captured in one conversation. But I think there are the way I look at this is two worlds, right? One world is something that is bringing the blockchain and the cryptocurrency into a more regulated and monitored space. The other side of the blockchain world is the Wild West, right? So basically, the world that we are, which is getting regulated and where it's coming to more in the mainstream, is a world where, but now this is becoming more regulated. Now, so I look at this as structured, a market, and then the unstructured market, or the one that is regulated and the one that is going to be regulated in the future. So in the regulated space, we are looking at one that does not even need regulations, which is the implementation of blockchain in traceability or provenance applications, right? So that is like selecting blockchain as a technology of choice. So it doesn't need any regulatory blessing, right? I mean, if you were to use Oracle versus PostGRE versus some other database, you're not going to go and take permission from the government, right? So similarly, you can use blockchain-based decentralized databases or technology to benefit from them, which doesn't interfere with any of the regulatory, areas or compliance, doesn't run into any compliance problems, right? That's the first part of the implementation of the things that people are working on. And in that, of course, there are so many different segments. Like I initially articulated, you could be working on pharma and other types of logistics supply chains. You could be working on automobile. There are numerous other supply chain applications that you can think of. The other side is the exchanges and money transfer, right? So exchanges this is an area where you're working using crypto assets, and you're essentially trading like you would trade forex asset, like you trade commodities or equity in an open market, and you'll be changing hands. Either it could be initial equity offering, like an initial public offering. So it'll be what they call in the exchange or the cryptocurrency world is an ICO, initial coin offering. And then from there, you are changing hands, right? So you are essentially doing trading in the secondary market, similar with the cryptos, right? So you are essentially listing assets, trading assets on various exchanges. Now, this is a space that is in the gray zone of regulatory and compliance space. So people are proactively, progressively regulating this area because it's a sensitive area. It's an area that has parallels in other asset classes, which you can use to regulate this asset class, right? And then you have the third area, which is the area of, which is NFTs, in the art area where you're creating tokens that represent one thing that you would be selling in the market, and then, it would change hands. So NFT is essentially a non-fungible tokens, which are basically tokens with supply one, right? There's only one of those tokens, right? Which represents something that you want to trade in the market or sell in the market. And then you have these various swaps that are happening, like Uniswap or various types of Ethereum based swaps that I tend to call now at this point the Wild West, because they are not even close to getting properly regulated. Regulators hardly understand that. They are like the next generation of things which are yet to get into the regulatory space. So those are, I think, look at this as three segments. One is using blockchain as a technology, which does not require any regulatory compliance blessing. Then you have the exchange world, which is asset class and trading, which is proactively getting into the regulatory zone and compliance zones. And the third is the really progressive area of swaps and other things. And of course, in the exchange area, you also have money transfer organizations, which are using cryptos possibly as a backbone of netting assets. So if you are transferring, you are in India and I'm in the US, and I am transferring money to you, for example, I would essentially buy Bitcoins at my end, send the Bitcoin to you, and then the exchange would sell the Bitcoin back into their market and then give you the fiat currency. So that's also being used as a money transfer mechanism, which is very swift and relatively efficient than the current system. I hope that answers, the question to some extent at least.
Yes, sir. The categories are like it covered everything, I think. So let's move to the next question. According to you, sir, what is the future of cryptocurrencies in the world and also in India as well? Can cryptocurrencies, a virtual asset replace real value assets like land, gold, etc. in the future?
So I'll get to the replacement question second, but first, what's the future of cryptocurrencies, right? So nothing has ever been able to stop the progress of technology. And if you hold that true, and we have seen that time and again, there are forces acting against it, but technology will always win because that's the thing of choice for the people, right? Because it makes people's lives easier, makes people's lives better, and it makes it more efficient, makes it more cost effective. So you can believe in this, that progress of technology cannot be stopped, okay? And cryptocurrency is a technology. We know that there are forces acting against it at this point in time, right? And for anything that is transformative, there had always been forces against it. Don't you agree, right? The more the forces that act against it, you understand that bigger the transformation, okay? And the reason you see so many forces against it is because the transformation is huge. It will change the dynamics. It will change the dynamics of power. It'll change, finance the way we see it. Today, central banks, basically, effectively, we trust central banks to create monetary policy for us, to distribute money, right? To create money in a way that we have trusted the governments to do it. Now, in the crypto world, we are don't think of this as an anarchy, right? So if you were to do trading, if you were to do money transfer, there will be regulators involved in this, and we welcome them. We all welcome regulators. We welcome compliance people to understand the technology, build regulations around it, build the correct regulations around it, so that the people who are acting in good faith, creating great companies, creating values for people's lives, are able to operate safely, and regulations separate the good actors from the bad actors. And that's what every good actor wants in the market, right? Now, a lot of governments look at this in fear because they don't understand this fully. They think that this is something that will replace these central banks, okay? Now, they start competing with it. They bring up CBDCs, right? Central bank backed cryptocurrencies, right? So we have a lot of CBDCs that that we talk with, a lot of central banks that come to us and talk about seek consulting and development in the CBDC area. So we will see central bank currencies, we will see internet currencies, which I call internet currencies like Bitcoin, Ethereum, and we will see fiat currencies. They're all coexist. Like we always say that when the television came along, we thought that the radio would be obsolete, but you still listen to the radio where you're in a car, right? So all of these coexist together. When the internet came, we thought television would be obsolete, but today we use radio, we use television, we use the internet, we use everything at the same time, right? So obviously cryptocurrencies are going to coexist with all of these things, right? And gradually, if it wins, it'll grow, just like the internet is growing over the television, right? I mean, we are no longer doing advertising on television more than over the internet or over YouTube or the other social media, right? So the way it looks at it is the next generation technology, and it'll end up winning and gradually taking more market share. It has an excellent and bright future beyond doubt, because the value it adds, just think about the value it adds, it's enormous, it's tremendous. And when a technology adds value to people's life, there is nothing in the world, there is no force in the world that can stop it.
Yes, sir. And now moving to the next questions. A very convincing argument against the idea of cryptocurrencies is the amount of energy it takes to mine and maintain the network. According to you, sir, is there an alternative to this, keeping in mind the energy shortage that the world will experience in future?
Okay, this is a terrific question, and it always amazes me why and how people say this, that cryptocurrencies consume more energy than anything else. You know, how much energy does it take to print fiat money and transport them, around, right? What kind of security, what kind of trucking, and energy that we consume in printing. Uh, I will start my video in a second. Just give me one moment, okay? The energy that it costs to print fiat money, the trees that we burn or cut down to print fiat money, the energy we consume to move fiat money is also a lot, okay? And I'm sure I'm missing so many other things, energy consumptions in the process of running this entire monetary system, right? It's not just energy; it's so much of lack of efficiency, so much of value loss, and so much of disparity caused by the current financial system. It's just not energy. It's a lot of hard-earned money that is just being sucked up at the top, right, with the current system. And we need to break free of the system, and it has not served us well so far. Okay, so we have seen disparity go up and the spread go wider and wider with every passing year. We have seen recessions, people losing jobs, and we have seen no corrective actions from the current financial system. Shameless repetition of the same problems that we keep seeing time and again. So those are some of the problems that we are facing with the current system. And now coming to the energy consumption, which is itself, the fiat money is comparably possibly larger than any other blockchain. We have invented so many other validation mechanisms that does not consume so much of energy, right? You don't have to just think about the first blockchain in the world, which is probably Bitcoin, right? That is not your benchmark. There are so many improved, better blockchains, different consensus mechanisms that do not consume so much of energy. And look at that. Do not use that as a point against blockchain and cryptocurrency. Bitcoin probably is the native, archaic, and the oldest blockchain around. So it has problems. That needs to be improved over time, right? So I think that this is not a question in reality, because the comparative analysis would show you that it is not a lot of energy compared to fiat money. And also you have to keep in consideration the improvement that is happening, which will lead to less consumption of energy over time.
Thank you, sir. And our next question is there any connection between stocks and cryptocurrencies, or stocks and crypto blockchain? So should I repeat the question?
So you're asking if there is any connection with stocks and cryptocurrencies, right?
Yes,
sir. So stocks or equity is an asset class, right? Like I said in the first part of the conversation, there are many different asset classes. So equity is an asset class that is traded, right? Then you have Forex, foreign exchange. It's an asset class that's traded. Commodities are asset classes that are traded. You have gold, silver, you have so many trading commodities that are being traded. Similarly, cryptocurrency is the one asset class which is backed by technology, the value of technology that is being traded now. So you can think of this in this particular context as another asset class, which is dissimilar to the other asset classes, but it's still another asset class as far as trading goes. Now, it could be the most valuable asset class that we have ever seen, okay? It could be the largest market that we have ever seen in terms of trading of asset classes, because it's not just an asset class, it's a currency. It can be used for running economic systems. It can be used for running, finance, right? Global finance. So it could be very well be the most valuable asset class that we have ever seen. But there is no direct connection, as far as I know, between cryptocurrencies and equity as an asset class.
Yes, sir. Hope this answered the question of the audience. So our next question is, we all know that Metaverse is revealing their futuristic gaming AR-based concepts and seeing them many more projects have been launched based on the blockchain and metaverse technology. According to you, will these projects affect the people positively or negatively?
So I'll tell you this, right? Anything Facebook does, in my opinion, is harmful to the society. And I can tell that to Mark Zuckerberg's face, okay? So my point is that anything Facebook does is nothing more than harm. It was essentially based on a psychology of validation, social validation, which is itself a negative way of building a company, okay? So frankly, in my view, this is the generation of the entertained, right? So I see these little kids and people always trying to find entertainment on Facebook or looking at what their friends are doing or social gaming. And I have struggled to understand what value these social networks really bring in people's life, other than like validating what your friends are doing. And it has also essentially killed the social fabric, the actual real physical social fabric that we have lived in. It has done more good to Facebook and Zuckerberg than anybody else, okay, and less to the common people. So my view of a metaverse and just Facebook in general is quite pessimistic, and I think that it would not affect people's life in a good way. This company does not create any value, in real terms. And Facebook, just generally speaking, blocked all ads in cryptocurrency, and then they started their own cryptocurrency. So you can clearly see the monopolistic, anti-competitive nature of this company in particular. That it would first block you and then do what they are blocking you for. So it itself, is a dichotomy itself is something that is fundamentally wrong with, right? So I feel that they have gotten big time into cryptocurrency as well, while they were stopping others from getting into it. So I don't know if that answered the question, but I really feel that Facebook or metaverse or these gaming platforms are going to bring little value into the lives of people.
Yeah, it gave the new perspective, sir. And my next question is, recently NFTs have been making some news. CryptoPunk NFT was sold for $532 million. NFTs, that is non-fungible token, is just a piece of data. Then why is there a sudden and huge hype of NFTs?
So if any of you here are entrepreneurs or to-be entrepreneurs, always remember that it's the hype that you have to stay away from, okay? So you have to find corners of the world where opportunities are hiding without a lot of hype. That would be ideally. I know it's easier said than done. It's very difficult to find untapped opportunities, which other people essentially have not found, and which will eventually become large enough for you to dedicate your life towards, right? But I think NFTs, coming back to NFTs, there is a huge hype component, more than anything else. So now, essentially, a way to look at NFTs, it's a piece of data that says that you own something. That's all there is to it. It's a piece of data that says you own something. Now, if you are buying an NFT, you're not going to buy it for the heck of the NFT. You're going to buy it for what you are buying it for, or what it represents, or the product or the service. In most cases, the product that you're buying, which is backed by that NFT. So I don't personally would attribute value to an object just because it's NFT, right? I'm just going to value it based on the value of that product. NFT to me doesn't have a special attribute which will lead by NFT. So I hope that somewhat clarifies what the doubt is here.
Yes, sir. The next question is, the money that the investors invest in crypto goes to whom and in what way it is used, and on what basis the investors get return?
Okay. Interesting. Okay. So now compare this Um, there are two things you can do here. We can segregate this question in two parts. One is the ICOs, okay, initial coin offerings. So in this part, you have to understand that this is a way of raising money. Now, a lot of doubts and questions raises when I talk about ICOs, and whether some of the ICOs are legitimate or not, it's a different question. But I am talking only about the concept of ICOs, okay? In the concept of an ICO, let's say you are a company, okay, and you want to raise money from the market. So what you do is you issue a coin on an exchange. And when people buy the coin, they're essentially paying to you the money, right? So you use the money to invest in the company and create value for the company so that the company's fundamentals improve over time and the value of the coin goes up, right? So the value for the company is raising money, which is through the direct offering of the coin. And the value for the investor is one, he buys that asset during the IPO, just like in the case of IPO, same as in the case of ICO. And then his hope is that the value of the coin would go up and he'll be able to sell it to another investor at a profit, right? So now you understand this cycle, okay, of where the money goes and how the money goes. So if in the secondary market, if you have bought a coin to an IPO, you are paying to the company. When you are selling the coin to another investor, the second investor is getting the coin and paying you the money, right? So I hope this is super clear as how the money flow works. Now, the other part, which is I think one of the other things that people have, if you're not clear of how things work, is let's say in the case of Bitcoin, right? Now, whoever created Bitcoin, attributed to Satoshi Nakamoto, but whoever the founder of the Bitcoin is, holds a lot of it, of course, right? But you look at a blockchain, a lot of it is decentralized, and that's what we hope for, right? It gets decentralized over time. So when it's decentralized, and you go to paybito.com or CoinDCX or Kraken or Coinbase Pro or wherever you go to trade, and you are buying Bitcoins, you're essentially paying to the other guy who is selling Bitcoins, right? So this is a secondary market trading, you can imagine. So on an exchange, there are two forces, demand and supply, or buy and sell. So what an exchange does essentially is matches buy and sell orders, right? So if I place a sell offer for 1 BTC and you come and place a buy offer for 1 BTC and our offers match, right, at the same price, then I am selling 1 BTC to you and you are paying me whatever base currency you're paying me to buy that BTC from me. So I hope that clarifies the money flow question. And of course, there are transaction fee that goes to the exchange, right? And there are network fees that goes to the validating those validators who are solving the proof of work in the case of Bitcoin.
Yeah, yes, sir. You explained the concept in a great way. And now moving ahead to the next question. There has been a growing demand for the regulations when it comes to cryptocurrencies, not only in India, but in the world as well. The Squid Game meme coin, which saw a historic rise and fall with the uh, promotes filling away with millions in hand raises. A very important question. What are your views on this, sir?
I could not follow the question very well.
Yeah,
Can you just
okay, yes, sir. I am repeating. There has been a growing demand
that
for.
one more time, please?
Yeah, yes, sir. Am I audible? Hello.
Yeah, you're audible. I can hear you.
Yes, sir. There has been a growing demand for regulations when it comes to cryptocurrencies, not only in India but in the world as well. The Squid Games meme coin, which saw a historic rise and fall with the promotes feeling away with millions in hand raise a very important question. So, sir, I think the question is asking that the Squid coin, which got a historic rise. So, what are your views on it? Like, was uh, was the rise worth, or what was the reason behind the rise, and similar, sir?
Okay. So before we get into this question, the important thing to understand here is this is a new market, okay? And in any new market, there are you have to look at when you're investing in a new market in asset classes, or even in conventional markets. If you're investing in asset classes, you have to look at the fundamentals, not on what goes up will come down, right? So look at the fundamentals. If you're looking for a windfall gain overnight, then you are also looking for windfall losses overnight, okay? So whenever you're investing, you should look for the fundamentals. In this case, we are looking for technology fundamentals. If I look at Ethereum, I can say that it has strong technology fundamentals. I can write smart contracts over it. There is a whole ecosystem around it. There are people who have picked up on Ethereum. So I look at the fundamentals of Ethereum. How decentralized is it? How application oriented or application friendly it is, right? That's how I would judge a coin or a token, based on the fundamentals of technology, not on how fast it's going up. Because if something is shooting up to the moon, it's virtually definitely is possibly manipulated, and it's going to come down. And even I look at Tesla, for example. To me, it's literally like a scam cryptocurrency. Tesla stocks are going up, like it is now valued at $1 trillion, and the revenue of $1 trillion company like Google or Apple or some of the other the companies that we have known for so long is, I think, at least like 10 or 20 times more than Tesla's. So if you're investing in Tesla, for example, the PE is huge, and it's laughable to be investing in Tesla at this time, and the whole increment of the value increase in value of Tesla stocks is essentially the fact that it's it is the marketing of Elon Musk, right? So the marketing that the storytelling of Elon Musk, that everything goes down and then he saves them, and then finally he makes it a big deal out of it, right? So this whole thing around this marketing and campaigning and the video making and portraying him as the hero, right, is what is influencing the stock prices. Because what is stock at the end of the day? We say that the stock is a reflection of a company's value. Is it really so? It's probably not.
Yes, sir, it's probably not.
We can't compare two companies, right? And we can't say that two companies have the exact same revenue or fundamentals or books and their stock prices are the same. There is no parity between companies and the stock market. Okay, so the point here is you have to look at the fundamentals of the company, same as in a crypto. Look at the fundamentals of technology before investing. I would not be able to comment why a coin went up, why it went down, but a flat remark on that is probably it's market manipulated and does not have any fundamentals, and that's why it went down. And the way it went up was marketing and essentially people believing in it through the marketing campaigns and believing in false information that was spread over the internet, and that's the reason it went up. And why it went down is super clear to us, because it never had the fundamentals.
Yes, sir. So due to lack of time, we will take the last question, and the last question is, I think it is lengthy, and it is on the bill which is passed recently. So according to the recent speculations, the crypto asset bill, which will be tabled in the winter session, proposes to prohibit uses of crypto assets as currency substitutes or as payment systems for remittances. The bill also proposes to stabilize a facilitative framework for distributed ledger technology and also lay the groundwork for creation of the official digital currency to be issued by RBI and regulated under the RBI Act. So what are your thoughts about this, sir?
That's a loaded question there. So now my view on this is that again, a lot of it is born out of fear, and as you can see, And whenever I see cryptocurrencies and blockchain packed in one sentence, and when people say that we don't like cryptocurrency, but we love blockchain, is essentially whenever you hear this sentence, you would know that they are against cryptocurrency and blockchain, both, not one. Okay. So if you do not like blockchain, if you do not like cryptocurrencies, you do not like blockchain. Okay. Because the largest implementation of blockchain is cryptocurrencies. Okay. So whenever you hear people, be it anybody, be it RBI or the government, and they say that I hate cryptocurrencies, we hate, it's a dangerous thing, but we love blockchain, it's such a great technology. They don't like any of them. They're just using blockchain as a way of saying that we love something about it instead of saying we hate it all, right? So now, so cryptocurrencies in this particular bill, they are okay with cryptocurrency as a tradable asset class, right? This to me is the first phase or the first step, okay, of the government accepting cryptocurrencies, okay? Now, of course, in the first phase, you cannot expect to have it all, right? So now at this stage, they do not want it to be used as a mode of payment or as a currency because they think it's going to compete with the INR, right? Or USD or, whichever government it is that is talking about it, right? So, so I think the point here fundamentally is, the cryptocurrencies are going to be used at the end of the day also, not just for trading, but also for payments. They are going to be used for cross-border payments, and that cannot be stopped, okay? What they need to do is that the central banks need to come together to regulate that, just like they have set up the SWIFT standard, right? Where central banks are able to match their ledger and balance their ledgers based on SWIFT messages, right? Which is sent across the central banks. So they need to come together and form a standard for cryptocurrency so that they can monitor, they can make Bitcoin or other cryptocurrency remittances or transfers regulated so that they can have an understanding, of how the flow of cryptocurrencies are happening, right? So now I hope I'm giving you a good picture about it. So you understand that this is the first phase of a fearful response of the RBI. So you have seen the RBI have attempted to ban cryptocurrencies. Well, RBI can't ban anything because they're not a regulatory body. So RBI can only regulate the banks. And in the past, we have seen that they have attempted to bar banks from, opening accounts for cryptocurrency companies. And then they have lost it at the Supreme Court level. Okay, and then they were not able to do that. So they were essentially wrong, right, the first time around. And that was the worst response of fear, right? Now we see that the second level of response after losing the first one, and here they are doing partial adoption or partial acceptance of Bitcoin and cryptocurrency. And then the phase two will come, where they will do full acceptance of cryptocurrency. So we are simply waiting to see that, like see the smarter ones, the more progressive ones, like, today in US, we accept payments in Bitcoins, we pay in Bitcoins, we invoice in Bitcoins or other cryptocurrencies, and we pay taxes in Bitcoins, right? On the capital gains as well as any profit and losses that we made on those payments. And what we see essentially is a regulated, better system where the government knows what the companies are doing, and the companies can also adopt the technology and adopt them the way they see fit, not because the government told them so. So it's about time that the government should start working for the people and not for itself.
Yes, sir. And by hearing your answer, I think that we generally think with our limited knowledge, and it was good to hear from experts, sir. Yeah. So we reached the end of the sessions. I would like to say, sir, that the session was very insightful, and the questions were answered in a great way. On behalf of Amalthya IIT Gandhinagar, I would like to thank you, sir, for sharing your valuable time and insights with us. We hope that we will get more opportunities to hear from you in future as well. And thank you all for attending this session and your cooperation. We hope that the knowledge and information taken from this session will help you in future. And at last, the 12th edition of Amalthya is scheduled in the span of 4 days from December 9 to December 12. You may visit our website and social media handles to get more information about the same. And thank you, everyone. Have a good night.
Thank you so much. It was a great pleasure being here again. It's always wonderful to be at the IITs where we have the only place in the world we have all the bright minds at the same place, right? So it's brilliant, it's excellent. It's always enjoyable. It's fascinating to be speaking at the IITs. Always looking forward to it. I speak in many different places, but nothing more pleasurable than speaking at the IITs. So absolute thank you to all for attending the session today. Yashu, it was great to have you as a host today, and I look forward to further events like this in the future. You take care, man.
Yeah, thank you, sir. Sounds
Thank
great.
you. Ciao.
Bye, sir.
Bye for now.